what are the top 3 covered call ETF dividend cutters here in Canada. In the past, I've done a couple of videos looking at the top 10 covered call ETF dividend growers. I've looked at the top 10 covered call ETFs with the longest dividend streaks. In those videos, I don't spend a lot of time on each fund. And in this video, I want to spend a little bit more time on each fund just to see that even though they've cut their dividend, say, since inception, which is where we're going to go to, the initial distribution versus the most current one, are these funds still worth it? Is there a story that can be told as to why they've cut it so much? And or is there another lens that we can look through? So let's do our homework. Let's get into it. The very first fund we're going to look at might come as a surprise to most people. By Horizons, it's CNCC, actually a very popular fund. This has cut its dividend from inception back in March of 2011 by 44%. But this fund has actually undergone a lot of structural changes since there. So basically, the fund at one time was actually called HEX. And then basically in June of 2022, there was a unit holder vote. They decided to basically overhaul the whole fund. Again, change its ticker, change the fund objectives. No doubt they changed the weightings of the underlying assets. And so in a way, it is kind of a new fund. Yet it still obviously retains probably a lot of the same companies. Again, just probably just changing a bunch of the weightings around. The section that we care a lot about is the inception distribution. The very first one, 17, basically almost 18 cents. And we can see right away it precipitously drops off. It's a variable distribution. It's bouncing around, and it basically hits a low. I think it was somewhere in 2018 where it hits a low of like 2.5 cents. Yeah, it's somewhere into, here we are. So we can see 2.87 cents. From there, it kind of rises. Now, if we move all the way forward to June of 2022, when the fund makes its structural change, we can see that, hey, look at this. It bounces around a little bit, and then it actually takes off, and then finally in December of 2022, it actually stabilizes out, and it's been steady ever since. Even though it's been rebranded, it is an older fund, 12 years old basically. And yes, you can say that, okay, the dividend has definitely shrunk, but again, I think this is a case of it's an unfair comparison. You got to go with where the fund has basically decided to make its changes. And basically, since the rebranding, this fund has actually increased by 100%. It stabilized the dividend, and not to mention, it basically holds all the big banks. It holds all your pipelines, communications, your utilities. It's basically the TSX 60, all wrapped up into one place. So you're going to get everything you could possibly want on the Canadian market within this fund, and it's actually grown its dividend by an insane amount ever since it decided to make those changes. So in this case, CNCC is very much still it's, in my opinion, it's still a great choice if you're looking for that Canadian exposure and you want everything kind of wrapped into one place. And again, you with CNCC, you get a solid yield at 10.25%. It also has a sibling fund with some leverage on it, which is CNCL, where you can which is just a fund that holds CNCC. So the next fund we're looking at is, coming in the number 2 slot, is BTCY, the Purpose Bitcoin Yield ETF. We'll kind of go over it lightly, but basically it's since inception, it is a newer fund, but it has dropped its distribution amount by 52%. So anyway, AUM 71.1 million. It's got a good yield at 13%. Its MER is 1.29%, definitely on the higher side. I mean, if there were more Bitcoin style cover call ETFs from some of the other big fund managers. Who knows? Maybe this would be like a normal number, but if we're going to just simply compare it to other equity-based cover call ETFs, it's definitely on the higher side. Those typically are kind of more in the 0.75, maybe 0.8 range for MER, and yeah, so 0.129 definitely on the high side. Let's go to portfolio breakdown. This is actually one of my favorite parts about the Purpose Investments website, is with all their cover calls, they actually list the specific coverage. So their strategy is basically they'll write on the portfolio up to 50% cover call coverage. And they also have they actually show you all of the cover call contracts that have been written for the month. We can see that a bunch of it is at the money, and then a little bit 4% out of the money, and also 8% out of the money. So 50% out of the money to a decent extent, and the rest at the money. Okay, we'll go to performance, because this is where the real story comes into play. So Bitcoin, or BTCY, is really just a victim of its inception date, right? I think it came online in late 2021. Basically, this fund was just simply late to the party, probably expecting that the bonanza would continue, but obviously it didn't. 2022 hits, and we start to see that precipitous drop off, and that hasn't changed. So a $10,000 investment would get you, 56.35 today. Okay, so inception date doesn't help, and even here in 2023, it's actually, since the beginning of the year, it's clawed back a good deal. So, I mean, if you made an entry point somewhere in here, you're certainly going to defend the fact that this is a good fund. But, I mean, again, we got to just look at it as a whole. Not great timing for it to come out. But let's look at its distributions, right? Because we're income investors, that's what we're in this for. Ultimately, yes, we care about fund performance, but no doubt we also very, very, very much care about how the distributions have performed. So we can see at its inception, it did about 10 cents. Then it kind of just dropped off for quite a while. Again, variable amounts. I think it looks like it was trying to stabilize, but okay, raise it back up. And probably, I guess, for the last year, since Bitcoin has been recovering, it has been doing a lot better in that regard. Basically rising, like 100%. If you were to catch it somewhere in earlier this year in January, you'd be enjoying tremendous price appreciation and also dividend appreciation. So again, depends how the lens of how you look through it. If you got in at the right time, this is an amazing fund, but as a whole, right, it's a newer fund. Basically it's 2 years old, and it slashed its dividend by 52%. So anyways, the last one that we're looking at, unfortunately, it's another Purpose Investments one, ETHY, the Purpose Ether Yield ETF, just another cryptocurrency that just, again, hasn't fared well. It's going to be basically no different than the crypto one, but we'll kind of go over, fund assets under management, 56.8 million. Again, good yield at 13%. It's got the same MER at 1.29%. Again, on the higher side, in my opinion, if you just compare it against other regular equity cover call ETFs. We go to its portfolio breakdown. We can see, again, up to 50%, up to 50% portfolio coverage. We have all these different call options that are shown and written, a bunch at the money, and of course, we got a good chunk of it also out of the money as well, at 4% out of the money. Performance and distributions, just like BTCY, victim of its inception date. They both came out at the same time. It simply just hasn't been able to basically capture what 2021 was. And that was certainly a bubble year with how much money injection there was into all the Western economies. Let's go down to distribution history. Let's go down all the way to the very first one, 14 cents, and then again, precipitous drop off and quite quickly. I mean, imagine investing in this thing. It pays out 14 cents, woohoo, that sounds great. And then like half a year later, it's at 2.5 cents. But ever since then, it even gets even lower at 2.1. And then, what is this? Somewhere in March of this year, it actually starts to grow again. No surprise there. Again, 2023 has been a rebound year of sorts. Kind of surprisingly, it's a weird. It feels like we should maybe be doing worse than we're actually doing. But that's the market for you. And sentiment rules the day with trading stocks. In my opinion, I think CNCC is just simply hearing that it's cut its dividend by 44%. There's much more to it. I think in my opinion, it's a good fund. I actually held the leverage version for a few months before I've decided to basically transition my TFSA more into US-based equity covered call ETFs. And this is just more of a long-term strategy. So CNCL, and maybe in the future in like an unregistered fund for myself, BTCY, ETHY. Again, my philosophy is like I don't like to invest in things that I feel like don't actually have a real use case purpose in the real world. Now you can say what you want about blockchain technology, you can say what you want about 10 years down the road we're eventually going Bitcoin, but as of right now I'm not convinced that the powers that be are really fond of making this thing happen. So especially in the US when you're the world reserve currency. Okay, so if you like what you saw, hit all the buttons of like and subscribe variety, and I'll see you all in the next video.